Welcome to the July 22nd, 2024 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. Wow, what a trading week! And it begs the question, do you have a harvest strategy? And I'll make a couple of key points here. Dow Jones Industrial Average tops 41,000 for the first time in history this week. Wow, it was a huge rally. One day it was 700 points. That's a couple of percentage points almost on the Dow. But by the time the week had finished, it settled back down and barely had a gain for the week. There was something else happening while the Dow was celebrating and then had a little swoon. Whoop, that is the NASDAQ 100. This is primarily driven by the tech stocks. So they started selling off and profit taking a lot of the hot names, and the rally became more broad-based, evidenced by the Dow, a slight gain for the week. But at the same time, tech stocks for the week down over 3% from this lofty peak. And it begs the question, what's the harvest strategy? So I'm going to give you a few ideas and harvest strategies as we go along the way, because one of the things in McGowan Group Wealth Management, by the way, I'm Spencer McGowan, president, founder of McGowan Group Asset Management. I'm also your financial weatherman, so it's good to subscribe because we were buying stuff at the end of 22 and it's done well. We don't always get it right. And we give you clues as to what we're doing. And before the video's over, I'm going to show you something that we accumulated over the last 5 years and how it's done. I'll even cover the value at risk of loss when it was down and what we did about it. Now, anyway, this says if you've got something that's high flying, especially if it has a low dividend, what do? And we've used this with clients that have big positions in their companies from restricted stock or from stock options. You get a huge spike. What's the plan? The tree and the fruit. You get a big rally, you take at least 10% off the top. And then you put that somewhere else so you'll have reserves. And I'll give you an example. In 2021, we harvested enough to have a good cash reserve. At the end of 22, we put it back to work. Now, it doesn't always work perfectly, but it is a good time to be raising tactical safety, which we did from some of our high flyers this week. 50% gains, 100% gains, and we took some off the top, somewhere between 20 and 30, or 20 to 30%, generally after a really huge rally, 10% after what we'll call a major rally. That way you still have the position size, but you've taken some of the fruit off the tree before it just rots on the ground, right? We don't want to let things rot on the ground. Is this rally justified? Well, this is the read from this week. 70 out of the 500 S&P 500 companies have actually reported earnings and sales. So how are we doing so far? Is there a contraction in earnings? Is there a recession in earnings? No. Earnings growth, 8.88% over last year. That's pretty good. But Alex pointed something out on this graph that I'll get to, and sales growth 4.26, slightly more than inflation over the past year. So sales are growing, profits are growing at about double that. That's okay. It says those businesses are likely, if they continue, that they can actually be worth more in the future. And if they get overpriced, we alluded to the harvesting strategy. What's overpriced? CrowdStrike got slammed 20% in a single day because they had a cybersecurity program update and it glitched all the airports out, and they got pounded by 20% in a single day after making a new all-time high. Wow, those guys are saying, wow, I wish I had had McGowan Group Wealth Management on my side because they would have harvested part of that, right? Because it had a major rally. CrowdStrike, very popular. Anyway, here is, this is important, and the blue is important, right? So earnings projections were negative in the second quarter of 2023. A lot of pessimism after 22 and the rate hikes. This is what's happened to the projections for earnings growth. They're sitting at 15% forward earnings growth. Even if they only did 8, there's still some bargains out there. Well, here's another harvesting strategy example. Domino's Pizza. We don't have it, but this is cold pizza. You could see it right here. They lowered their forecast. They've been doing pretty good. But Domino's Pizza was way overpriced in retrospect up here, and I think it's still kind of overpriced. So it's not a recommendation for your portfolio until you come down and get a plan, just because we talked about it. But look at that. Boom. So it starts in its downtrend, way overpriced here. You're paying 30 times earnings for a pizza company that's already expanded nationally. It's not like they have a whole bunch of new locations to do. They said, oh, our international strategy is not working that good, and boom, they just took them to the woodshed. So it's gone from 540 to 405. Harvesting strategies, especially if it doesn't pay a dividend and it's sitting at 30 or 100 times earnings, you want to take a little off the top or just sell the whole thing. Regulation and inflation. I'm going to prove to you that regulation growth equals inflation, at least on this graph. Look at this. So we're going to go back to 1960. Now, 1960. I wasn't born till right in here, by the way, but anyway, this is the graph of the Federal Register. How many pages of government regulation is there? Well, look what happened here. So we're sitting, somewhere below 20,000, and we take the Federal Register pages. Now the blue line is important because that's inflation. We doubled regulation, and look what happened to inflation. Because when you overregulate, people they can't make as much stuff, and the price go up because there's not enough stuff. Pretty simple equation, right? You're feeling, oh, I could see that correlation. The Federal Register explodes at the end of the 70s to almost 90,000 pages, and inflation goes to 15%. Well, that seems pretty correlated. Ronald Reagan came in about right here, right? 1980, the high inflation. He cuts the federal regulations by about 40%. Some would say 50%. His goal was to chop the number of regulations in half. He said, we got to get rid of stupid regulations. And he did. Now look at this. Inflation goes from, 15% back down to below 2%, where the Fed wants to be. What should the Federal Reserve be doing? Now, at the end of 2023, this says 90,000 pages, but there's also an estimate that it's now as high as 120,000 pages, which would be an all-time new record. By the way, that's the biggest cut that we had in regulation since Reagan, and you could see inflation stayed low. As it went up, what happened? Inflation went up. Wow, it's harder to make stuff when you're over-regulated and there's too many rules, and you're sitting there reading rules instead of making stuff for people. All right, so we had covered global high yield in previous episodes. You know that if you're a subscriber. And back in October, we were buying it, and now we're figuring out where we want to take profits as the Federal Reserve cuts rates. Back in October, you could buy bond funds paying 10%, 75 cents on the dollar. They're high yield, but B-rated corporates, so it's not without risk. But when it gets really cheap, it's good to buy. Another thing that got cheap was energy infrastructure. Now, this has been a part of the portfolio since 2018. I bought it too soon, by the way, but it pays a dividend. So I just kept reinvesting, and this is one of our portfolio model positions. McGowan Group Wealth Management, a fiduciary registered investment advisor. We run these model portfolios, and I have money in all those disciplines. Well, this category of pipelines, they had we got out in 2014, and because they had too much capital expenditures. like Dallas-based Energy Transfer was spending $2 billion a quarter, and they were borrowing money and selling stock to do it. But they quadrupled the number of pipelines, finished it about 2018, and they started to cash flow again on the positive side. And this was true nationwide. And it's hard to build pipelines, especially now. And it's not like you can go build a new pipeline and compete with them. Anyway, so this is a basket of pipelines run by a good manager. 5-year performance record, how'd it do? Well, with dividends reinvested, 5 years, 13.8%, and you got a dividend along the way, which helps you could either reinvest it, or if you're retired or want to retire, you can live on that income. So this category actually had 24% appreciation and 91% total return with the dividends reinvested, or 13.8% per year, just as a double check. But look, this was the pandemic. This thing, it was worse than getting chopped in half, but you still had the asset and you still had dividends, even though some of them got cut. So that's a good crisis management lesson. I should have bought it right here in the pandemic. I bought it too soon, but here, if you have a great asset paying real cash flow that's valuable real estate essentially, then you can see that helps. And we're looking at potential real estate investments as the office crisis shakes out and the rates come down. That may be a category that we talk about in the future. Thank you for tuning in, and McGowan Group Wealth Management clients are served by a team of 11 from here at the Crescent, and you can always come see us if you go to networthradio.com and then click Contact Us. We'll set your time for a brainstorming session.